Hello traders, welcome to a top-down analysis of the VIX indices. So let us begin. We are beginning with VIX 101S. So firstly, before you start trading, don't just open a chart and then you're already placing trades without even knowing where the market is headed. So first of all, we begin on the weekly time frame. So yes, firstly we begin on the weekly time frame. That is where we start marking our zones. So you have to minimize the chart and then you mark your key levels. So that is our supply. That is the supply zone. That is the supply zone. And then we have our demand zone right here. So we have our demand zone. That is the demand zone. That is all we do on the weekly time frames to just mark our key levels. As you can see, price is now moving from supply zone headed to the demand zone. However, it's not yet there. And then we go to our daily time frame. So from the daily time frame, we can be able to see the resistance and support that price is is currently trading at. So we have there resistance. So we have there we have our resistance there, and then down here we have the support that is supporting price from going to the demand zone that we marked on the weekly time frame. So we have a support right there. So currently price is trading between resistance to support and support to resistance and then resistance to support. Now price is moving from support to the resistance. However, it's currently in the middle of a zone. And then if we go to the 4-hour time frame, we can be able to see that price has broken a new high. We can be able to see that price has now broken a new high. That is a break of structure. That is a break of structure. And then from the 4 hours, that is our order block where we can expect price to come back and mitigate. That is why you are seeing the buy limit there. So I'll explain why I placed a buy limit there. So that is our order block from the 4-hour time frame. From the 4-hour, we're waiting for price to come back and mitigate this order block. And then from the 1 hour, we can be able to see that price has broken a high. And then now we are waiting for the price to come back and mitigate our order block. That is why I placed a buy limit there, because price has broken a high. I'm waiting for it to come back and mitigate that order block. So I'm waiting for price there. That is the order block is always there. The last internal break of structure, which is there. This candle before this move down here. So, so that is so that is our order block. And then let me give you the coordinates. I always use my I always use my 1 hour for entries, and then the 30 minutes I just use it to see the change of character clearly. And then sometimes I also enter in the M30, but most of the time I enter using the 1 hour order block. So for VIX 101S, let me give you the coordinates. So we're expecting price to come back to that order block. And then our entry price will be 603.76. And then our stop loss just slightly above there. The last rejection, our stop loss is 588. And then we have 3 take profits. I normally use the daily time frame for my take profits. So the first take profit is right there at 662.52. And then the second take profit is at 704.93. And then the third take profit is at 733.42. So let me give you the coordinates. So our coordinates, our entry price, we are waiting for price to come back to that order block. So our entry price is at 603.76. And then our stop loss it's at 588.11. And then our take profit one is at 662.52. And then our second take profit is at 704.93. And then our third take profit is at 733.42. And then always apply proper risk management. Nothing is certain in Forex. We are trading probabilities. So always make sure when you're trading, you apply proper risk management. Always apply proper risk management. So those are the coordinates, the entry price, and then our stop loss, our TP1, our TP2, and then our TP3. So this is a real account I'm trading. I usually don't trade big accounts. So this $23 account that I funded. And for me, this is a big amount because the spreads on these indices, they are very small. So to me, that is a big account I'm trading. So that is the entry that I'm waiting for on VIX 100 1S. And then let's go and analyze volatility 100 1S. Always start on the weekly time frame. Do a top-down analysis from the weekly. You mark your supply and the demand zones. So that is our supply zone. That is our supply zone. And then we have our demand zone down here. So that is our demand zone right there. That is the demand zone. So already from the weekly time frame, you can already tell your bias. You can already tell the market direction. You can see price always trades between supply and the demand zone. So it moved from supply to demand, demand to supply. So supply to demand. Currently, price is reacting from the demand headed to the supply. So volatility 101 is it's in an uptrend. So you have to place buys. That arrow is to signify that the bias is bullish. Then you go to the daily time frame. From the daily time frame, you can be able to see where the change of character happened, where price reversed. So the change of character, happened at that level. So that is where the change of character happened. That is a change of character. It happened. That is where the sellers left the market. And then now, the recent structures, you can see price is now breaking structures to the upside as we are in a bullish trend. So that is a break of structure. That is a break of structure. And then our order block. That is our order block from the daily time frame. Price is currently reacting off that order block. So VIX 100 is an uptrend. And then if we go to the 4 hours, you can be able to see that the change of character happened at this level. Change of character happened there at that level when the price broke their lower high. And then we had, I always like to study the price, how price moved, so I know the next line of action. I always study the recent price action to know how price is behaving, and then I will know my next line of action. I don't just jump in the market and then I'm already placing trades. No, that is not how I do it. I like to take my time to thoroughly analyze the market, try to understand what the market did. So we had a break of structure here. That is a break of structure. And then our order block was there. That was our order block. That was our order block. That was our order block. However, price did not react from the order block. it reacted of FVG of the fair value gap. Price reacted of the fair value gap. So it's always important that you study whatever instrument you're trading. Know how it reacts, whether it reacts well off the FVG or the order block. So for this case, it reacted off the FVG. And then we had a break of structure. And then our order block from the 4 hours. That was our order block from the 4-hour time frame. That is where price was reacting off it. It was bouncing off at that order block. And then if you go to the 1 hour, if we go to the recent structures, if we want to get the most recent structures, the recent price action, so there was a break of structure here. There was a break of structure, and then our order block, that was the order block where price reacted off it. However, if we took a trade from that order block, we would have been taken out, we've been stopped out because price did not react off that order block. Instead, it came back to react off at this order block, which I'm calling now the support, because price has reacted to that order block a lot of times, so it becomes a support. And then now we had another break of structure here. That is a break of structure. That is a break of structure. And then our order block, that is the order block, is always there. Last internal break of structure. The last internal break of structure, which is that one. However, price did not react from that order block. Instead, it reacted off the FVG, of the fair value gap. Instead, price reacted off Instead, price reacted off the FVG of the fair value gap. And then we had another break of structure here. Actually, that high. It's a break of structure. That is a break of structure. That is a break of structure. And then our order block. That is our order block where price has dipped in. Where price has dipped in. Price has broken structure. And then it came back to tap into the order block. However, it looks like it's still coming to mitigate this order block again for the second time. So if you are to trade, if you are to place a trade on VIX 101S, wait for price to get at this order block and then wait for a rejection candlestick like the bullish pin bar, the doji or the confirmation, and then the tweezer bottom. Or tweezer bottom, because if you are to place a trade here, then that means your stop loss will be very huge. Wait for price at this order block, because from the look of price, it looks like it's still coming back at this order block before you can place a trade, because you've just broken structure. So you have to wait for price at this order block, because it looks like its price is still coming back at this order block, and then you can place your trade here, and then stop loss just slightly above that order block. So if I was to, you can even put a pending order, put a pending order, and then for my take profit, I like to use the higher time frame take profits. So in this case, I will use the daily. So coordinates for that, for this entry. So our entry price, 1272.71. Our stop loss, 1255.42. And then our take profit, I like to use the daily time frame, 4165.79. So the coordinates for VIX 101S. So the coordinates, entry price, 1272.71. And then our stop loss, 1255.42. And then our take profit will be at 1465.79. So that is a buy limit you can place. A buy limit you can place on big 101S. So place a buy limit, go to new order, then market execution, select pending order, and then buy limit, and then select the volume, put your entry price, your stop loss, and your take profit. And then you wait for price to get there. Always apply proper risk management, because we are trading probabilities. Nothing is certain in Forex. Therefore, apply proper risk management. But yes, if you want to take a trade on VIX 100, these are the coordinates. Place a buy limit. Looks like price is coming back into this order block again. And then let us do the last one, which is VIX 100. Sorry, step index. So always start on the weekly time frame. So that is That is the supply zone. That is the supply zone. Supply zone. And then we have our demand zone down there. Our demand zone. So already from the weekly time frame, you can be able to see the bias that price is moving from supply headed to the supply zone. So step index is in a downtrend. So place we are looking for sales now on step index because now price is moving from supply to the demand. Like I always emphasize, price moves in between supply and demand zones. And if you don't know how to mark supply and demand zones, check out one of my lessons on the SMC strategy course. It's there on how to plot your supply and demand zones. Yes, but for now, price is moving from supply to demand. So we are placing sales on step index because step index is trending bearish. And then from the weekly time, from the daily time frame, I like to study and see what price has done before. So from here, actually, let me start from there. So from there, we had a break of structure. We had a break of structure, and then that was the order block. That was the order block. Break of structure, price went back to go and mitigate the order block. That was the order block. And then we had another break of structure. We had a break of structure there. Break of structure. And then our order block is always this last candle before the impulsive move, before the correction move up. So that is our order block. So that is our order block. Price, that price mitigated. That is our order block, that price mitigated. As we can see, price always breaks structure and then it went back to go and tap into the origin. So price swept liquidity. So this is the liquidity that price swept. And if you don't know how to spot liquidity, go and check out my video on liquidity, on how you can, on the types of liquidity present in the market. So price broke structure and then it went back to go sweep the liquidity. This is the equal high liquidity that price swept to go tap into that order block and then it's shooting down. So if we can see down here, we have a break of structure. So we have a break of structure. So we have a break of structure, and then that is the order block that we are waiting for price to go and mitigate. So that is the order block from the daily time frame. That is the order block. That is the order block. So price has broken structure. Always when price breaks structure, mark your order block, wait for it to go and tap in there. So from the 4-hour time frame, you can adjust the order block from daily to 4 hours. That is the same. And then if we go to the 1 hour, which is our entry time frame, from the 4 hours, that is from the 1 hour, that is the order block. From the 1 hour, right, that is the order block we are waiting for. And we cannot mark this as our order block because when price broke this structure, it did not mitigate that order block. Therefore, if we are to mark this as our order block, we'll just be trading from liquidity. And then, as we can see, our FVG is present. And if you don't know how to spot FVG, I've put out a lesson on my channel on how to mark your FVG. And then the liquidity, this is the liquidity that price will sweep. This is liquidity. This is equal high liquidity. This is the liquidity that price will sweep to go and tap into the order block. And then it will continue pushing down. So that is the liquidity. While liquidity is present, fair value give present. So that makes our order block more valid. So if you are to place an entry, place a sell limit. So those are the coordinates. That is our entry point. And then our stop loss slightly above that high. And then our take profit, which is this last low here. So the coordinates, entry price, you want to place a trade on step index. Our entry price, it's at 8291.4. And then our stop loss is at 8314.8. And then our take profit is 8235.2. So these horizontal lines I'm placing, these ones are the ones I just use to be able to get the coordinates. But yes, if you had to place a sell limit, let me show you. Go to the symbol, and then the default lot size on step is 10. Go to market pending order, sell limit, because we are in downtrend, we are selling, and then price, the entry price is 82, entry price 8291, 8291.4, and then our stop loss is at 8314.8, and then our take profit 8235.2, and then you place your sell limit. So we are waiting for price to go and sweep this liquidity, tape us into that origin, and then continue selling because step index is in a downtrend. And then let me write out the coordinates. Our entry price is 8291.4. Our stop loss is at 8314.8, and then our take profit 8235.2. So if you want to take the trade with me, those are the coordinates. So yes, so that is how you do a top-down analysis on volatility indices, and I'll be dropping a video every Monday analyzing volatility indices. So that is all, traders. See you next Monday. See you next Sunday. I always analyze on Sundays, and then I'll drop the video on Monday. Thank you. Let's get some pips together.